Hello, and thank you for joining me, Fiona Cincotta, Senior Market Analyst at City Index, as we take a look at what's been driving the market today, Monday, the 30th of October, and a look ahead as to what we will be watching tomorrow. Now, as far as indices concerned in Europe, we saw the indices actually managed to close higher after losses last week, but it still looks like European indices are on track for a monthly decline, with the DAX set to lose around 4.5% so far this month. Now, on the data front, we had German GDP data, which actually came in better than expected, contracting just 0.1%. As opposed to the 0.3% contraction that was forecast. We also saw GDP for Q2 was upwardly revised to 0.1% from 0%. Now, whilst the data was modestly better than expected, it's not going to change the narrative that Germany is proving to be the sick man of Europe, and there are concerns over the outlook for the German economy, with a recession looking likely across the rest in the second half of this year. Also, German inflation came out, which showed that inflation continued to trend lower. As far as earnings were concerned, HSBC was the key release today. Now, the big bank saw profits almost double to 7.7 billion. And that was actually below the 8.1 billion that was forecast, as it benefited from higher interest rates across the globe from the Fed, the Bank of England, European Central Bank, and we also saw HSBC announce a further 3 billion to be returned to investors. Share price did fall owing to the miss on profits, and also we heard that HSBC took a $500 million hit from the Chinese real estate crisis. Now, as far as the US is concerned, US indices are pushing higher today after falling across last week. The S&P, for example, fell at 2.6% last week. It is still set for a decline across the month. It pushed into correction territory last week, just pushing up from that this week. But as I said, set for a third monthly fall, which is the longest running falling streak since the pandemic in 2020. Now, just to take a quick look at a chart here, Euro US dollars, we've been watching after the results or the data came in from Germany. As we can see, the euro has managed to push back over the 20 SMA, and it's going to be looking for to test resistance potentially around that 106.30 level, which was the October 12 high. And if we're going to move above there, it exposes the 50 SMA at 106.50. On the downside, I think, if we do see a break below that 20 SMA at 105.50, that's going to open the door to 105. Which was the October 12 low. Just looking ahead now to what we've been watching, or what we plan to watch, tomorrow on Tuesday, the 31st of August. So overnight, we've got the Bank of Japan rate decision. Now, Bank of Japan is not expected to change its interest rate. However, we could see potentially some relaxation around the yield curve control and potentially an increase in the inflation outlook. Now, this came after inflation data in Japan was hotter than expected. And also it comes as we're seeing that US dollar JP yen trading around that 150 level. So not only is the market going to be watching to see what the Bank of Japan has to say, but also we remain on intervention watch at that line in the sand, which we see around that 150 level. Also, tomorrow we're going to be looking at Eurozone inflation. Hot on the heels of German inflation, Eurozone inflation is expected to cool quite considerably to 3.2% from its current 4.3%. Now, we had the ECB meeting last week where they left interest rates on hold after 12 back-to-back hikes. As inflation continued to cool and as they raised concerns, or policy members the ECB raised concerns over the growth outlook for the region. Now, we also have Eurozone GDP data to give us further clues as to what that growth outlook is looking like. And, well, growth there isn't expected to be. So we're expecting GDP for Q3 to come in at 0%. That was after 0.1% growth in Q2. So, quite anemic data. I think, if we cooler than expected inflation, weaker than expected growth, and we could see that euro US dollar moving back towards that 105 level. As far as earnings are concerned, it's all about Apple after the close. Tomorrow we've got the Q4 earnings. Now, Apple's expected to see revenue fall by 1% to 89.3 billion, and EPS is expected to rise by 7.7% to $1.39 a share. I think one of the key things to be watching will obviously be iPhone sales. iPhone sales are expected to increase 2.3%, and service growth is also expected to be strong. The big question is, will this be able to offset weakness in iPads, Macs, and wearables? Obviously, China is also going to be a big focus in these numbers, as we've seen those restrictions and pressure come in China. Just taking a quick look at the chart now. We can see Apple has been trending lower. It's been trading in a falling channel. Now, it did fall down. We've seen it find some support, and it's just rebounding, trying to push back above that 200 SMA. And I think that's going to be key. If we can see a move above that 200 SMA, or even close above there at 170, that's going to open the door to the 173, 175 level. But if we failure to see the Apple push above that 200 SMA, means that we will be testing the October lows once more. So thank you so much for joining me today. Obviously, if you like what you've been watching, then please follow us on the YouTube, and I look forward to speaking to you tomorrow. Thank you. Goodbye.